Welcome back. You're still tuned in to Halftime Report on CNBC-TV18. We have the Bank Nifty, which is a bit sluggish, so down around 100 odd points. Otherwise, the Nifty and the Sensex are just about consolidating. Well, it was a steady quarter for Thyrocare. Revenue surged. We had margins which were up around 200 basis points year on year, but was flat Q on Q. We have Rahul Guha, who's the MD and CEO of Thyrocare, joining in now to discuss and field a lot of questions that we have. Rahul, hi, welcome to the show. Well, I'm going to start by asking you about your partnership revenue, because that comprises of API Holdings, which is basically the parent company of PharmEasy, as well as your government contracts. So inclusive of everything, it was down around 4%. And you have in the past alluded to the fact that PharmEasy was showing some amount of, lower volumes in terms of the, revenues that you all generated. So I wanted to understand what exactly is the situation looking like now? What was it this quarter? And what is it looking like now, considering that they did have a successful rights issue, as well as an EBITDA of around 60 odd crores, which was clocked in the first half? Are things improving?
Sure. Look, as I said in the previous calls as well, the degrowth at PharmEasy has largely been driven by a move towards profitability. So as a result, a lot of the discounting on diagnostics had kind of been pulled back on the platform. And that resulted in a volume shrinkage and all of that. But we've kept prices stable now for the last couple of quarters. So actually, quarter on quarter, as I shared in the investor call yesterday as well, PharmEasy has grown about 3-4% quarter on quarter. Of course, year on year, it's down versus what it was last year. But quarter on quarter, it has stabilized and actually started to grow. I'm hopeful with the rights issue and the funding issues behind us. Now we can invest more in the diagnostics, customer acquisition, and see how the business can scale up going forward. So I'm quite hopeful on that front.
Okay. Rahul, hi, good afternoon, and thanks for joining in. Discounting was the big issue that your industry was facing, and competition as well, in the last 12 to 18 months. Is the worst of discounting now behind us, and what are we looking at in terms of pricing going forward?
I think discounting, most players have actually become quite rational in terms of the pricing. You would have seen many of the reports indicating that most of the online players have actually pulled back on discounting. I can speak of PharmEasy because that's a group company as well. There we had substantially pulled back discounting to ensure that, the bottom line could be maintained for the company as well. And that strategy has worked. And now we've kind of bottomed out and starting to grow from a profitable base. And I'm sure that's true of many of the other online players as well. For us at Thyrocare, as you would have seen, we've taken price up, I think, almost year on year, close to 10%. And that's actually reflected in our gross margins also. And we haven't really seen a volume pullback as a result of that. So even our volumes have grown at about 8% steadily. So I think overall it's a good picture.
All right, volumes have grown at 8% despite you taking a 10% price hike. That is something that, the street would appreciate, given the fears that everyone had about discounting. You're saying that the worst of discounting is behind, and now people are looking at increasing prices as well. But let's talk about some newer verticals of your business. Your Jaanch, or investigative / sickness brand of testing. You had a target of close to around 25 to 30 crore revenue by the end of next year, with doubling this year. Could you give us a sense of how the metrics out there have performed? What are the volumes you're doing there? And what's your moat in this business as against, say, someone else who would launch a similar product?
So, yeah, I think Jaanch has surprised us very positively. We launched Jaanch only in June and July of this year. I think within a couple of months, we've already clocked 1 crore of revenue from Jaanch. So there's clearly a consumer demand for these kind of packages. And given that they're doctor curated, actually, we are getting a lot of support from doctors also as they think about investigative packages using Jaanch. Look, the moat is it is actually an amalgamation of different tests very targeted towards specific therapies. So I would say the moat is really around the brand and the investments we are going towards putting behind towards building doctor recall and the like. So I would say as we build it as a brand, the large moat will be around customer recognition of Jaanch as something to lean on when you're worried about something and you're worried about something serious.
Okay, so I'm assuming Arogyam is preventive testing. So that's what you do on a regular basis, and it's your general health that you're looking at. And Janch is basically when you want to focus on a specific issue that you might have. Okay, well, that point is taken. Leave us with your margins, because, you know, at one point in time, Rahul, Thyrocare used to enjoy 40% margins. It used to enjoy 50% margins, which is reported at some point. You're at 25%. What's the upper limit that you can get to and sustain at?
Yeah, see, I think it's important you look at the normalized EBITDA, which is what I've been talking about throughout, that we've always guided that we will kind of hold it in the 30-31 range as we enter into this financial year. And as operating leverage kicks in, we'll start to see some improvement. But I think the EBITDA of 40%, the days of the EBITDA of 40%, actually came with very little growth. So if you go back into the history of Thyrocare, yes, we had very, I would say, attractive EBITDA margins, but the revenue growth was flat, I would say, almost for a period of 3 years. As we have now brought the investments back into the company, brought the investments back into the brand, as you'd have seen, our core business, that is our franchise business, grew at 20%. Our partnerships business, excluding API, grew at 22%. Even our D2C, our direct-to-consumer business in Thyrocare, has grown at 19%. So I think those investments that we're doing, you know, yes, it comes off a lower EBITDA base, but it is driving growth and therefore absolute EBITDA in the Thyrocare kitty. So it's really a trade-off. You know, do you want to be 40% with flat growth, or do you want to be 30% with 20% growth? And we're choosing the latter.
Okay, all right, Rahul. You know, just before we let you go, just had a quick question. You know, now that you have the successful rights issue which has taken place with regards to PharmEasy, just can you give us a more of a granular sense in terms of what it would mean for Thyrocare, as well as any possible plans of a, you know, reverse listing, something which was spoken about earlier, an IPO for PharmEasy? What do you know of and what can you share? Quickly.
So as I said, I run the Thyrocare business as the managing director for Thyrocare. So I'm not party to all the discussions on the corporate structuring at the group. So I can't comment too much on that. I do believe, though, the rights issue does infuse liquidity into the company and then allows us to invest, you know, in areas to drive growth profitably. In the API group, diagnostics is the most profitable part of the group, and so therefore I'm sure, you know, we'll see some of the capital getting diverted towards diagnostics.
All right, we'll let you go on that note. Thanks a lot for joining in and, you know, answering all of our questions. Let's slip into a short break.